What if I told you that the desk that you are sitting at right now could be worth up to $1,500 a year in pure tax savings? And the crazy thing is most small business owners skip it because they think they don't qualify or they're scared that the IRS is going to come knocking. Today I'm breaking down the home office deduction and the 2 rules that you have to meet, the 2 ways to calculate it, and some of the mistakes that we see that can cost you money. By the end, you'll know exactly how to turn your workspace into a money-saving machine the legal way. So let's break down this idea of a home office. And I want to tell a little bit of a story. I was talking to a client many years ago, and the client says that this home office deduction, this idea of a home office deduction, it just takes too much time and there's really not enough benefit. Oh, and by the way, the IRS doesn't like it, is what they told me. So I talked with this client, I sat down, I asked a few questions. We spent maybe 25 minutes gathering information, and in less than a half an hour, we created the home office deduction. We calculated it. We determined what that home office deduction, and it equaled $3,200, which saved them over $1,100 in tax savings. 30 minutes time spent for $1,100 in tax savings. Imagine how powerful that can be. And so for those of you that are understanding, okay, what is the benefit of a home office deduction? And really it's turning after-tax spending into pre-tax spending, which I talk about all the time. But again, what does that mean? These are expenses that you're going to have no matter what. You know, whether you own a business or not, you're going to have a home and you're going to be paying for this home. But now as a business owner, you get a deduction for a portion of those expenses, the portion that you use for your business. And that's the power behind after-tax versus pre-tax spending. How do we take spending that you're going to do no matter what and turn it from after-tax spending into pre-tax spending? And again, in that example above, this isn't super simple, this isn't super hard, this isn't crazy, this isn't, rocket science. It took us 30 minutes to determine what part of their home would qualify as a home office deduction, how much of that home qualified, as well as to add up the expenses that occurred throughout the year. 30 minutes that produced $1,100 in tax savings. That at an hourly rate is over $2,200 per hour that they made from implementing this strategy. Not many people are making that much per hour where it doesn't make sense to just take the small amount of time to do this correctly. Now, what I want to promise to you is by the end of this, you will know if you qualify for the home office deduction and how to claim it. And I also want to tell you, for those of you that maybe are scared of IRS coming after this is black and white in the IRS code. The IRS wants you to take advantage of this. They just don't want you to abuse it. So take advantage of what's available to you, but do it right. So let's start to break that down. What is the home office deduction? Basically, the home office deduction is taking a pre-tax deduction under your business for the business use of your home. Now, this could apply for you whether you own your home, you rent your home, whether it's an apartment, a house, a condo, whatever it is. If you are paying to live somewhere and you use a portion of that place that you're living for your business, then you can potentially qualify. We'll talk about the qualification rules. Now, with that being said, over 90% of business owners that we talk to qualify for a home office deduction. And we'll talk about the little kind of loophole that really opens up the door for the study of a home office deduction to so many business owners. You can even qualify for a home office deduction if you have an office in a different place outside of your home that you do normal client work at. As long as you meet a couple qualifications, you can still qualify for that home office deductions. So let's talk about the 2 qualification rules. The first one is regular and exclusive use. And so I'm going to break that regular and exclusive use down. Regular basically just means that you have to use the space regularly. If you walk into this home office space that you're using once a quarter, that's not going to qualify. It has to be something that you're using as a regular basis as part of your regular business duties. And exclusive, this is the one that's a little bit harder to meet, but exclusive simply means, the definition, that there is no personal use of the space. So it has to be a space that is only used 100% of the time for business. If you are, do some business on your dining room table, but then later you do meals on that, or you're working on your couch, that's not exclusive use because you're using that for personal use as well. That's not going to qualify. But you have a space in the corner of your home, or you have a special bedroom in your home that you use only as your home office deduction, that's going to qualify for this exclusive use. And so there is some instances, we talk about this, where some people say, well, my home office is in a closet or something that you have to walk through, but the only thing we do is walk through there because we have to walk through that closet to get to this other room. And the IRS says there's court cases that support that, say that's okay, as long as it's only like a walk through. So I always kind of call that the walk through exclusion. If you're just walking through that space to get to another space that you can't get to otherwise, that's okay. Or in other cases, if you have a studio apartment, maybe you have one studio apartment where there is no separate bedrooms, but you take a corner of that studio apartment and use it for your home office, as long as that corner is only used for business, that would still qualify under that exclusive use. So 2 qualification rules. The first one is regular and exclusive use. Regular just means something that you use on a regular basis, and exclusive, not used at all for personal purposes. The next rule is a principal place of business. So this is the one that can sometimes cause confusion, but there is also a loophole associated with it. So the obvious one is that if this is a place where you have clients that come there, you have customers that come there, patients that come there, whatever it might be, obviously that's going to meet that requirement. So if you're doing that out of this home office, of course you meet that requirement. Now, where it's harder to meet that requirement is that if you have a separate physical office. So let's say you're a veterinarian and you have a physical office that you treat the animals, the pets that you're working on, you treat them at that separate office. This is going to be a harder pace because at your home, you're not meeting your patients. You're doing administrative work. And that's where this administrative or management office loophole, if I want to call it that, came into play. And basically there's tax court cases and law that got put into place that basically says that you can qualify under this administrative or management office, and that can qualify you as a principal place of business if you meet a couple specific things. First is it is used for administrative or management activities, and there is no other fixed location where substantial administrative or management activities are conducted. So let's go through that. Let's break that down a little bit. Let's use that example as a vet. Maybe you're a vet that you have an office that you treat your clients, your patients at that specific office. But then you come home and you work out of your home office and you answer emails, you do your bookkeeping, maybe you do some research out of that home office. Basically, you do administrative or management duties out of that home office. That's going to qualify as a principal place of business. So you can have a separate office space and still have an home office space that will qualify as a principal place of business if you do substantial administrative or management duties that are specifically done in that home office. So that's the power behind this, and that's where it opens up the door a lot, because back in the day, people would say, well, I have a separate office, I can't qualify for that. And that's not the case. The Congress changed that rule specifically if you do substantial administrative or management duties in that home office. So we talk about the qualification rules: regular and exclusive use, and it has to be a principal place of business. Again, if this is your principal place of business, you're meeting clients there, you're doing your work there, everything happens there, or if you're virtual, obviously that's much easier to meet too. But if you have an outside office space, then you need to qualify under this second category for a principal place of business, and that's administrative or management duties, where you do substantially all or majority of your administrative or management duties in that home office space and not your separate location. Now, next we're going to talk about the different methods for calculating this, where to take the deduction, your tax return, and also a few strategic planning opportunities that are involved around that. But real quick, if you are a business owner and you are tired of guessing when it comes to taxes, we just released a brand new tax savings starter kit, and it's 100% free. Inside, you're going to get our ultimate list of business deductions. You're going to get real case studies showing how others saved $5,000 to $25,000 or more. And you're going to get access to a bonus discovery call with our team. Just head over to taxsavingspodcast.com/starter kit to grab your free copy. Again, that's taxsavingspodcast.com/starter kit to grab your free copy. All right, now back to the home office calculation methods. It's also some special considerations around the home office and where you actually take the deductions. So we're going to talk about 2 calculation methods when it comes to the home office deduction. And there's the simplified option, and then there's the regular method, or the actual method. The simplified option is exactly that. It's simple. Basically, you get $5 per square foot up to 300 square feet with a $1,500 max. Obviously, $5,000 or $5 per square foot times 300 is $1,500. So that would be the max. Now, this is simple. It's easy to record. You don't have to gather all these documents and expenses and all these other things, but it is capped at that $1,500 max if you have up to 300 square feet. So if you had 200 square feet, you would take 200 square feet times $5 equals $1,000 deduction. That's the simplified method. And you get to choose which method you want to use, whether it's the simplified method or the regular or actual method. And with the actual method, basically you add up all of your home costs. So think of things like mortgage interest, property taxes, maybe rent if you rent your home, home insurance or renter's insurance, utilities. If you have HOA or condo dues or something like that, those are included. Repairs that you have, maintenance, depreciation, garbage, security fees, lawn care costs that you have, all of that. You're going to add up all of those costs associated with your house, and you're gonna multiply that total cost by your business use percentage. And your business use percentage is a quick calculation. You take your home office square footage divided by your total home square footage. Now, one thing, when you're calculating your total home square footage, you're gonna wanna exclude common areas like hallways and things like that. So take your home office square footage, divide it by your total home square footage, and you're gonna multiply that by all of the costs associated with that. So as an example, let's say you had all those costs, the property taxes, the rent, the home insurance, the fees, the repairs, the maintenance, the depreciation, the lawn care, security, all that. You took all those costs and added up, and the total was $31,800. If you were doing the actual method, the regular method, you would take $31,800 and multiply it by your business use percentage. Let's say your home office was 200 square feet and your home was 1,600 square feet. That gives you a business use percentage, 200 divided by 1,600 of 12.5%. You take that 12.5%, multiply it by 31,800, and your home office deduction for that year is $3,975. Again, this method, a little bit more complex, right? We're doing a lot more legwork for this one because we have to gather all those costs and associated expenses and everything we have throughout that. We have to do the business use percentage calculation, but in some instances, it can provide a better benefit. So in this case, we had a 200 square foot office. We got a $3,975 deduction. If we would use the regular method or the simplified method, we'd have only got a deduction for $1,000, 200 times 5. So run the numbers and see where it makes sense. If you live in a kind of a low cost area or smaller home, something like that, maybe the simplified method makes sense. It's a lot easier. You can do it done a lot quicker. But if you have an expensive house, maybe a bigger home office, we want to start looking at that actual method. Put in a little bit of work. Again, it's not that much. It doesn't take that much time to put all this work together. That client that I was told you about at the beginning, we spent 30 minutes and we gathered all that information and got their deduction from that method. So do both methods and just see which one gives you the better output and utilize that method. Again, you have the actual method, the regular method, and then you have the simplified method, which is just $5 times the amount of square feet with a max of 300 square feet. All right, so let's talk about taking the deduction. This is the meat of it, right? Because this is where you actually get the tax savings on your physical tax return. So if you're operating as a sole proprietorship or a single member LLC, no S Corp election, you're gonna take this deduction directly in your Schedule C. So on your Schedule C, there's a simplified option. There's a home office line, and there's a simplified option there where you just enter your square footage times $5, and you just take that deduction there. Now, if you're using the actual method, you're going to use Form 8829, and that is as well is going to report back to your Schedule C the home office deduction for that. So sole prop, single member LLC, you're taking this deduction on your Schedule C. It's either going to be right on the Schedule C if you're using the simplified option, or you're going to fill out as well as Form 8829, which will then report back to your Schedule C if you're using the actual method. If you're organized as an S corporation, there is no home office deduction on the S corp tax return. And that's where this idea of an accountable plan comes into place. An accountable plan is simply a reimbursement for you as the owner, where it's a business deduction and it's tax-free income to you, a reimbursement for that. So if you're organized as an S corporation, we need to do an accountable plan where basically your S corp will reimburse you for the use of the home office. And we're going to use those same calculations as an S corp owner, just as we would if we were a sole prop or a single member LLC. We want to make sure we have that documentation on file to back it up and support it. So if you're sole proprietorship, single member LLC, take it on your Schedule C. If you're an S corporation, we want to have a properly set up accountable plan and a properly made reimbursement payment for that accountable plan expense. It's going to create a business deduction on your S corp tax return, and you're not going to pay any income taxes on that when you receive that money into your personal account. So that's how you take the deduction. Now let's talk about some common mistakes to avoid, because again, this is something we do want to make sure that we're doing correctly. So some common mistakes that we see: not using the space or using the space that your home offices are operating out of for personal activities. Obviously that can completely disallow the election. So make sure we're hitting that exclusive use. That's a key part that we need to make on this. The other mistake we see is not documenting measurements or the expenses associated with that. This comes with any tax strategy. We always got to dot our I's and cross our T's, which basically just means we have to have documentation. Have a picture of your floor plan and map out what is used as your home office deduction so you have support. Take some pictures of your home office and say, here's my home office and here's how I'm calculating it. Have that on file. You'll likely never need it, but if the IRS does come knocking, hey, we have that information on file ready to defend. And then all those expenses, put them on file. So here's my mortgage interest, or here was my rent, or here's my lawn care costs. Have all those expenses on file, and then just show how you determine that rate. Business use percentage, home office square footage divided by total home square footage, multiplied by your total expenses, cost of living in that place. You get the business portion of those total expenses. The next misunderstanding we see is misunderstanding the principal place rule. So many people say, well, I have a separate home office, so I can't obviously qualify for that. That's simply not true. And we talked about that earlier. So make sure you kind of know these rules because, like I said, over 90% of business owners I talk to qualify for the home office deduction. How many of that 90% is actually taking it? A much lower number. Because again, they don't understand what's available to them, and that's hopefully what you're helping you understand today. The other thing that we see some people mistake is they think that some equipment might be part of the home office deduction. And I want to be very clear. The home office deduction is for the physical home office, but things that are inside that home office, maybe you have desks, maybe you have microphones, maybe you have computer screens, cameras, TVs, headphones, computers. All of those things are separate from the home office deduction. If those are 100% business use, those are going to be separate expenses. We're not taking the business use percentage on a 100% computer that's in your home office. So think home office deduction as structural. The things outside of that create a cost to maintain that home office. The electricity, the utilities, the lawn care, those types of things. And think of things like equipment, the things that are inside that home office deduction, the chairs, the desks, the equipment, the computers, all that's going to be a separate. That is not part of the home office deduction. You're going to take that as a separate business expense. And of course, that's going to be 100% deductible versus a home office is never going to be 100% deductible. There's always going to be some personal use in a home, of course. So keep that into consideration. All right. So to wrap things up, let's again restate 2 rules, 2 methods. There's 2 rules for the home office deduction, and then there's 2 methods to take it. The 2 rules are regular and exclusive use, and making sure it's your principal place of business. And don't forget about the loophole. If you do administrative or management duties, substantially all of them in that home office, you can qualify for that principal place of business, even if you have an office somewhere else that you go to. And then the second piece is, how do we calculate this? This is going to be the actual method or the simplified method. Simplified method is $5 per square foot with a max of 300 square feet. In the actual method, we're going to determine what is our business use percentage, home office square footage divided by total home square footage, and multiply it by all the expenses that go into that home office deduction. Now, the key thing to think about this is that these are annual savings. So, in the example above, we created over almost $4,000 in tax deductions using the actual method. But that's $4,000 in a tax deduction that we're going to see every single year that maybe takes us a half an hour to gather the information for. If you're in the 37% tax bracket, that's almost $1,500 in tax savings every single year for maybe a half an hour's worth of work. There's power behind that. Make sure that you're doing it correctly. Dot your I's, cross your T's, have that documentation to support it, because more than likely, you're going to do this right. You're not going to get a knock from the IRS, but if you do get a knock from the IRS, we want to have that information readily available to say, here's our home office deduction. Let us know if you have any questions. That second piece I want to talk about is that the home office deduction also unlocks this mileage deduction. We're going to be talking deeper about a mileage and the automobile deduction, but the home office deduction can unlock even more deductions that wouldn't be available if we didn't have the home office deduction. And let's think about mileage. If you go from your home to an office, that's considered a commute. That is not deductible mileage. So if you're taking that, that is not allowed. That is not deductible mileage. Commuting miles are not tax deductible. So if you go from your home to an outside office, that is not deductible mileage. But what if you started to end your day in your administrative office, your administrative and management office that's in your home? So now your commute looks more like going from your bedroom to your home office. You do an hour or 2 of work in there, then you drive into your other office, maybe you do some client work there, and then you drive back to your home office, do some more work to end your day. Well, guess what? That commute went away, and now you are going from one office to another office, back to another office. That is deductible business mileage. So not only are you now in those cases getting the home office deduction, but now you're adding to your automobile deduction as well. And there's some real power behind that. Now, take this and take some action on it. Start to measure your workplace. How much square footage are you working out of? Which method do you want to use for this, and start to track those expenses and make sure you implement this correctly. Make sure you go through on this. You've learned it now. We've talked about you've learned it. Now it's time to implement it and implement it correctly. Cross your T's, dot your I's, make sure you have all the records organized for all these expenses, and then make sure you take it correctly on your business tax return. Whether it's your Schedule C if you're a sole proprietor or a single member LLC, or whether that is through an accountable plan if you are organized as an S corporation. So whether you've got a fully dedicated office or just a small kind of nook in your living room, the home office deduction could put hundreds or even thousands of dollars back in your pocket each and every year. Remember, 2 rules, 2 methods, and a whole lot of potential tax savings. Now, if you found this helpful, don't forget to subscribe, hit that like button, and share it with a business owner who's sick of paying too much in tax. And if you want help from our team of tax professionals implementing this strategy, along with so many other tax strategies, visit taxhelm.com. That's TAXELM.com, or click the link in the description for a free discovery call with our team. We are helping people like you legally lower your tax bill every single day. Thanks for watching, and I will see you on the next one.